Welcome to Philosophy Talks from the crystal clear LOHAS channel. You know, what if an economic miracle was also a ticking time bomb? Today, we're digging into Taiwan's incredible success story, but we're also looking at the hidden fractures that could shake the entire global economy. This isn't just about charts and numbers, it's about the very real impact on people's lives and what it all means for our own financial well-being. So if you're ready for a deep dive that really connects the dots, make sure you subscribe and stick with us right to the end. You won't want to miss this. All right, let's jump right in. The super influential magazine, The Economist, recently published this really thought-provoking analysis, and it sent some serious shockwaves through the financial world. They even came up with a name for the risks they saw coming: Formosa Flu. Now, this isn't a medical problem, of course. It's an economic one. It's basically a diagnosis suggesting that the very engine that powered Taiwan's amazing growth might be creating some pretty severe side effects. So what exactly are the symptoms of this so-called Formosa Flu?
Well, The Economist zeroes in on one key policy: keeping the currency intentionally undervalued. Now, this is great for exports, right? It makes them cheaper and gives a huge boost to trade. But, and this is a big but, it comes at a pretty steep price. We're talking about massive asset bubbles. Get this, housing in Taipei is now more expensive than in London, and it's a real hit to the wallet for everyday people. And on top of that, it's creating a ticking time bomb right in the middle of the financial system. And here's where it gets really, really interesting. Because interest rates are so low, insurance companies have been pushed to invest huge amounts of Taiwanese savings overseas, mostly in US dollars. But the payouts they owe to their policyholders, those are in new Taiwan dollars. You see the problem? It creates this massive currency mismatch. If the local currency gets stronger, which a lot of people think it should, these insurers could face just staggering losses. We are talking about a risk of around $200 billion. That's a quarter of the entire GDP. So you can imagine a diagnosis this severe was bound to get a pretty strong reaction. This wasn't just some academic squabble, it was a direct challenge to the very heart of Taiwan's economic strategy. And that led to a major clash of ideas. Taiwan's central bank fired back immediately, calling the report's conclusions distorted. They argued that using something like the Big Mac Index to value a currency is just way too simplistic. In fact, they came up with their own counterproof, the iPhone Index, to argue the currency was actually overvalued. Their whole take is that this policy isn't a sickness at all. It's a shield, protecting the economy from wild swings. And the central bank's main point is this: in today's global economy, it's not just about buying and selling goods anymore. It's about the huge, massive waves of financial capital that are constantly moving around the globe. And the scale of this is just mind-boggling. These financial flows are over 19 times larger than the value of all the physical goods Taiwan trades. And that brings us to the central puzzle here. With a huge trade surplus and all this investment money pouring in, Basic Economics 101 says the currency should be much, much stronger. So, why isn't it? That question points to a much deeper story about the choices being made and what the real consequences are. You know, the answer isn't just buried in financial reports. You can see it in the real-world impact on people's lives. This whole economic model has put an immense amount of pressure on society, and we can actually see the cracks starting to show in 3 really critical areas. Okay, first up, housing. You combine those low interest rates with a flood of capital, and you get a total pressure cooker of a property market. A typical home in Taipei now costs over 16 times the median annual income. That just puts the dream of owning a home completely out of reach for so many people. And next, while the value of property has just gone through the roof, wages for most people have basically flatlined. To stay competitive, companies have kept labor costs down, and that's created this huge gap. I mean, the average salary might look okay on paper, but that number is totally skewed by a few super high earners. The reality? Nearly 70% of people actually earn less than that national average. It shows you who's really benefiting from this economic growth. So what happens when you combine unaffordable housing with stagnant wages? You get a critical internal crisis, a demographic collapse. With a fertility rate of just 0.78, Taiwan's birth rate has now fallen to the lowest in the entire world. The very economic model that's driving today's success is actually undermining the foundation for tomorrow's. But the strains, they're not just internal. When we zoom out and look at the bigger picture, the very foundation of this economic miracle reveals a critical vulnerability to the outside world. It turns out, the source of Taiwan's greatest strength is also the source of its greatest weakness. So Taiwan's global power, it comes from silicon. It produces over 90% of the world's most advanced semiconductors. This is what people call the silicon shield. The idea that because Taiwan is so vital to the global tech supply chain, it has a unique kind of security. But here's the twist. This super high-tech shield has a surprisingly low-tech weakness. That semiconductor industry, it's a massive energy hog, and Taiwan imports 97% of its energy. This creates a critical, and I mean critical, dependency on the rest of the world. So that brings us to the key question. In a crisis, how long can the lights stay on? Well, for liquefied natural gas, or LNG, a key source of electricity, the national reserve is just 11 days. That is a razor-thin margin for an economy this important. And look, this isn't just some theoretical risk we're talking about. A leading US think tank, the Center for Strategic and International Studies, or CSIS, recently decided to put this vulnerability to the test. They didn't simulate an invasion. They simulated something much more plausible, a naval blockade. The results of their wargame read like a chilling countdown to disaster. In just 3 weeks, all the LNG is gone. By week 9, the coal runs out, and the power grid effectively collapses. This modern, high-tech, incredibly advanced economy just grinds to a halt in a matter of weeks, not months or years.
And here it is, the war game's most devastating conclusion. By that 9-week mark, the famous silicon shield completely shatters. The very industry that's supposed to protect Taiwan is one of the very first casualties of its energy vulnerability. It turns out the shield is made of glass.
So what's the big takeaway from all this? The Formosa Flu and the lights out scenario, they're really two sides of the very same coin. They both stem from an economic model that has prioritized short-term efficiency over long-term resilience. And this brings us right back to our core philosophy here at LOHAS, lifestyles of health and sustainability. Because true health, whether it's for a person or for a whole nation, is built on resilience.
So, what's the path forward? Well, experts have laid out a pretty clear prescription. It starts with diversifying the economy, not putting all the eggs in one semiconductor basket. It means seriously boosting energy security, which involves pricing electricity more realistically and exploring every single domestic energy option. And finally, it means building digital resilience to protect data and communications if a crisis hits.
And this national-level prescription, it has direct implications for our own LOHS planning, for our own lives. It really forces us to ask some tough questions. Is real estate, which is so fueled by these specific economic policies, really a guaranteed safe bet? Should we be thinking about geographic diversification for our own investments to hedge against these kinds of local risks? And maybe above all, it reminds us that in an uncertain world, the absolute best investment we can make is in our own personal resilience, in our health, our skills, and our ability to adapt to whatever comes next. Because ultimately, our individual well-being is completely tied to the health and resilience of the society we live in. We just can't build a sustainable life on an unsustainable foundation. And this leaves us with a final, really important question to think about. Can any of us be truly well if the very ground beneath our feet is shaky? The path from efficiency to resilience is definitely a challenge, but you know what? It's also a huge opportunity to build a more sustainable and a truly prosperous future for everyone. It all starts with understanding, and it continues with conversation. If you found this analysis valuable, please subscribe to Crystal Clear LOHS, hit that like button, and share it with someone who needs to see it. We'd love to hear your thoughts in the comments below. Thanks for tuning in, and we'll see you in the next episode.